And now we come to trade of the day, the highlights of this week's trades. In current news this week, we bring to you holidays celebrated around the world. This week we celebrate Holi, which is a Hindu holiday also known as the Festival of Colors. It signifies the beginning of spring. Also this week we celebrate Good Friday. Good Friday occurs 2 days before Easter Sunday in the United States. It is the day when Christians all over the world observe the death of Jesus. Good Friday plays an important part in the Christian faith. Welcome to Trade of the Day, a weekly series coming to you every Saturday on A.M The Trader. We'd love to know where in the world you guys are tuning in from. Post in the comments where you're watching or listening from today. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on the planet should have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's make it happen, guys. This is how you could have made 5% in the markets, taking one trade a week, using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward. We had a total of 2 trades this week for a potential of 12%, but remember, we only need one trade to net us 5%. Let's break down this week's trades. A reminder, this is not financial advice and that trading comes with real risk. But before we dive deep into this week's trades, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from 3 things, guys. 1 is understanding the market and how it operates. 2, having one trading model that has IPTA signatures. And 3, having a plan and process that you follow every day. Successful trading is really boring, guys. Like I said, you're doing the same thing over and over and over again. This is the 3-step process I use to take trades weekly. Step 1, we have the condition. This is based on a higher time frame directional bias. Step 2 is the stage. What sets up your trade? What does it look like? Step 3 is execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, which is the stage. Because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows, you have everything you need for a setup. That's just a little nugget for you guys once again, okay? So then we have step 1, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go and what is it reaching for? This week we're expecting the weekly candle to expand higher. This doesn't mean we want it has to close higher. We're just expecting predominantly more movement to the upside. Institutional order flow on the higher time frame is bullish. Down closed candles are supporting price higher. Price is finding it easy to break highs and is spending little to no time below lows. Okay, these are all this is showing a bullish institutional order flow. Then we have step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar, okay? It tells us when to look for a setup. We look for medium to high impact news drive to narrow our focus. Then we'll stock setups on calendar days and on days after the news release. The optimal days this week to trade were Monday, Tuesday, Wednesday, Thursday, not Friday because the markets was closed for Good Friday, okay? Secondly, we look at what sets up the trade and what it looks like. This will be your model. Since we were expecting the weekly candle to predominantly expand higher, we went into the market hunting buy setups. Okay, this is our buy model. For our buy model, we want to see liquidity taken below a key low, or the key low traded to. Displacement higher causes a market structure shift. We wait for a short-term low to form in the market structure below zero point 0.5 of the fib, and then we'll set our limit order at the short-term low, stop loss below the swing low, and we're targeting a 1 to 3 always, okay? It sounds complicated if you're hearing it for the first time, but it's really simple. You just need to keep showing up on the charts and look for it, okay? Now let's look for it in action this week. So first trade of the day came this week on Wednesday, 27th of March. As you can see, we had a FOMC member speaking at 6 p.m., which was later in the day after the markets closed. We did have a setup form prior to the news, but I believe because it was later in the day, it was a clear setup, so I got into it even though it was before the news. And the news was technically for the next day because the markets closed at 5 to 6, so 6 begins the next day. So technically it was for the next day. But anyway, as you can see, we traded below a key low. Liquidity was taken below a key low. We had the displacement higher causing the market structure shift. We waited for a short-term low to form below zero point 0.5, because the first short-term low wouldn't have counted because it was above zero point 0.5, okay? And that's not our model. We're waiting for it to form below zero point 0.5. So once this short-term low formed right here, that would have been our entry signal. So we would have put a limit order at that short-term low below the zero point 0.5. As you can see, the stop loss goes at the swing low, and we're targeting 1 to 3, okay? Our target was hit at 4 p.m. As you can see, we got in the trade at 10:25. You would have got in the trade at 10:25. Your target would have been hit at 4 p.m., meaning you spent 5 hours, 35 minutes on this trade, okay, guys? But one thing about this trade that was different is that it offered you multiple opportunities to get into the trade below the 0.25. As you can see from the picture, it did offer you multiple opportunities. We had the AM session buy, we had the launch session buy, and we also had the PM session buy before it took off. This whole move happened during the last hour macro, okay, which is 3 to 4 p.m. This trade had a drawdown of 84 ticks. Our stop loss was 133 ticks, and take profit was 399 ticks for this trade. So this trade would have netted you 5% for the week, and after Wednesday, you would have been done trading, okay? Also, we did have another trade of the day form this week. We had two forms. Thursday, 28th of March. As you can see here, we had news release in the morning. So you're waiting for all that news to release, and then we're looking for a setup, okay? So this one is a different variation of the setup. This one, liquidity wasn't taken below kilo. The kilo is the liquidity. If the kilo was probed, and then we had a displacement higher that caused the market structure shift above the kilo, then that still is still a valid setup. Okay, it's just a different variation. So we wait for a short-term low to form in the market structure below 0.5, 0.25, sorry, my bad, on the fib extension, which it did form. And we're waiting for the time and price. The most important thing in trading is the time, okay? So we don't trade during certain hours, and certain hours we do trade. So we're waiting for the PM session, which begins at 1:30. So the setup formed prior to the PM session. So when the PM session came, it offered us an opportunity to go below that short-term low. So our entry would have been right here actually. So entry was in at 135, looking for a quick 1 to 3. This was a short trade, but it did net you 1 to 3. You was in that trade for 3 minutes. Total drawdown was 4 ticks. Stop loss was 16 ticks. Take profit was 48 ticks. Okay, short trade, but it does meet the criteria for us for our model. So it would have netted you 1 to 3. This week, we showed you two opportunities that could have netted you at least 5% with, with 2% risk. If you had taken all of these two trades, you're looking at 12% for the week, okay? Again, not bad for a week's work. But remember, like I always say, we're only looking for one trade that will net us 5% for the week and we're done. So far for the month of March, we would have hit our goal of 20% for the month, taking one trade a week, and that's four trades in the month. So as you can see on the chart in front of us, we did have two opportunities in the first week of March, three opportunities second week, three opportunities in the third week. In the last week of March, we had two opportunities. So we did have on each week we had one opportunity to get our one trade to net us our 5%. Okay. Thank you guys for tuning in today. Like I always say, this skill is not easy to master, but it's also not impossible. You only fail when you quit. If you found the information here today valuable, make sure to subscribe and turn on post notifications if you haven't already. Thank you for watching and tuning in to Trade of the Day. See you all next Saturday, same time, same place. Happy hunting, guys. Thank you.